And staying in the United States, there is possible stagnation of economic growth into the year ahead, driven by labour market shortages as well as continued supply chain issues. Michelle Schneider from Market Gauge joins me for more on this. Michelle, lovely to see you as always. What's the solution to this ongoing issue here?
A solution? Well, at this point, it really seems to be something that can't be resolved by threatening to raise rates. Obviously, the market took it as a threat because it turned around and started to rally after the Omicron scare and the Powell taper tantrum. So in terms of the resolution, I don't think I could venture to say physically what we need to do in order to get people back to work or to get the cargo ships that are still offshore onshore and then get the truckers out. That's beyond my pay grade. But what I can say is that the market resiliency is incredible in the face of everything. And what remains to be seen right now is after two huge rallies following by a lot of volatility last week, will it continue? I mean, one thing you and I talked about last week, Holly, remember we had this conversation about credibility and you said what would bring credibility back to the U.S. market? I thought a lot about that question. It was a great question. And my answer was the retail investor. And that's clearly what we've seen. So now it remains to what happens here. Will consumer confidence come back? Will we get more buying into the holiday season? Will the Fed behave themselves? Will inflation at this point rear its ugly head because it seems to have subsided? There's a lot of questions here, but right now, price rules.
Yeah, absolutely. And I mean, obviously there's so many moving parts here in regards to America's economic recovery. And we know Jerome Powell is now serving as second term of the Fed chair. But there's so many moving parts here in regards to even the new COVID variant as well. But what do you think that's going to do to the market ahead? Or do you think those impacts will in fact die off?
Well, it died off already pretty quickly. I think the market has accepted a couple of things. Number one is that a rise of cases doesn't necessarily mean economic shutdown, at least not in the United States. That doesn't seem to be a threat. And I think that's going to be the most major concern. People getting sick, hospitals loading up, well, there's all kinds of news on whether or not it's mild symptoms. People vaccinated may still get sick, but they seem to get over it quickly. And I think the whole world at some point will have to get used to the fact that there will be mutations of this until we get to such point where most people are either vaccinated or have built antibodies or what have you. That's not affecting the market at this point. To me, the bigger threat of the market right now is inflation took a back seat, interestingly, and will it come back? Because we're still seeing elevated food prices, and now oil prices are bouncing again, and industrial metal prices are bouncing again, and coffee prices are continuing to be really high, and even lumber prices are coming back. So that will be our next narrative, that and can we grow economically, as you started the segment with the sort of the stagnation that we have here with GDP.
Absolutely. A coffee as a commodity, yeah, prices are soaring there, which is bad news for me. I don't need my coffee price to go up anymore. I do love my caffeine hit of a day. Now, I wanted to ask you, Michelle, lastly, before we wrap things up, and I don't mean to throw you in the deep end, but the Putin and Biden talk has been completed and obviously is making headlines at the moment. And the United States has also evaluated the possibility of restricting investors' ability to buy Russian debt on the secondary market. What impact would this have on American markets?
You know, just looking at past skirmishes we've had with Russia and the Ukraine, whatever impact it's had has been extremely ephemeral. And I'm guessing that we're in the same situation right now. I think the markets are used to economic sanctions. Whether or not Russia can disrupt the natural gas market, I think that would be maybe the thing. But even that has come off tremendously in price, more affected by its seasonality than any kind of geopolitical news. So at this point in time, I would say that the market doesn't seem to really care very much.
Michelle Schneider, great to chat with you as always. Take care. Have a lovely week.
Same to you. Thank you, Holly.